Thanks for watching the TD Ameritrade Network's Year in Review specials. I'm Alex Coffey. On this show, we will focus on the airline industry, from the major airline manufacturers to the airlines themselves. We're going to start with Boeing. In late 2018, the company's 737 MAX airplane crashed in Indonesia, and after another fatal crash in Ethiopia earlier this year in March, the 737 MAX was grounded. To discuss this impact it's had on Boeing stock and the overall market, I'd like to welcome in George Tillis. George, starting with the initial reaction that we've seen to this Boeing news with the 737 MAX being grounded, what have we seen in terms of Boeing stock price?
Hey, Alex. So overall, the reaction was pretty devastating for Boeing's shareholders back in March, when essentially the certification for the 737 MAX was revoked by U.S. regulators, both the FAA and the Department of Transportation. And since then, in the last 9 months or so, towards the end of the year, we saw the stock down about 20%. So it was higher in the earlier part of the year. It is, of course, down as a result, of course, of the recertification that Boeing is going through in terms of bringing the plane back in line. Overall, the impact of the company relative to the industrial sector and relative to the overall domestic economy is rather pronounced.
And George, when you talk about the impact of the stock price, obviously we're talking post the news happening. We saw the stock sell off significantly since then, but it was actually having a really strong start to the year. And I think that gets lost when all the chaos that we saw ensue in this particular name post that news. And this stock was up over 30% going into that, surprise announcement of the crash, but also then the grounding of the stock.
Yeah, it was. I mean, overall, when it comes down to the manufacturing prowess of Boeing relative to the total manufacturing base of the United States, it's a very important company. Overall, the 737 MAX represents, according to, of course, the plane being recertified, about 40% of their operating profits. So the stock back in 2018, earlier first quarter of 2019, did remarkably well based upon the plane and the expectations the plane had, as well as all of the backlogged orders of that plane. So once the news came out, they had to effectively continue operations, albeit at a smaller clip. The planes now are operating or being manufactured about 40 planes a month versus the 50. But at the same time, the challenges are they're burning through cash, and their total revenues now relative to the last, for the same quarter last year, last reported, down 20% and about a $3 billion cash burn every quarter as a result of continuing production of the plane, but it's not manifesting into earnings per share.
Yeah, it's clearly been an extreme impact on Boeing. You mentioned the 40% number that it has in terms of their profit numbers there, but what impact has we've seen this spill over into the overall market, if any, as we know Boeing's such a stalwart in this industrial space?
It is. I mean, overall, we got to look at the Dow, for instance. When it comes down to the components of the Dow, we know it's a price-weighted index. Boeing is the largest component because it is the highest priced stock in the Dow. So that perhaps, again, is one of the reasons why the Dow has underperformed the broader index like the S&P 500. The overall impact of Boeing, Alex, when it comes to the economy is rather large because, again, Boeing is the largest manufacturing company in the United States for exports. And some estimates, it's very difficult to ascertain, but the estimates are that it's actually crimped GDP growth, at the very least in the last 2 quarters, each quarter somewhere between 0.2% and about 0.4%. And so this is a company still manufacturing planes, but we can't count those planes that they're actually building up in inventory because they're not selling the planes. So overall, it's not necessarily just impacting the manufacturing from the standpoint of the non-defense sector, but it also, again, is essentially an employer of thousands of people, as well as it requires thousands of suppliers to manufacture their planes. So it really has a lot of spillover effects. It casts a wide net in terms of the suppliers that effectively supply to Boeing. And it's really impacted the manufacturing sector because we know the ISM numbers, especially in the last 4 months, have demonstrated contraction. And I suggest that Boeing is certainly part and parcel of that.
All righty, George, we've got to leave it there. Great insight as always. Coming up, the Chartmaster is going to join the show to look at the 2019 airline winners and losers. So stick right here. We'll be right back.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity, Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets, born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. Nasdaq. Rewrite tomorrow.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
I'm happy to give you the tour. I love doing it. Hey, Jay.
Jay? Charlotte.
Oh, hi.
He helped me set up my watch list.
Oh, he's terrific. Excellent tennis player.
I recognize that voice. Annie? Yeah. She helped me find the right bonds for my income strategy.
Very popular around here. There's a birthday going on.
Carl, he took care of my 401k rollover.
Wow, you call a lot.
Yeah, well, it's my money we're talking about here. Joining us for karaoke later?
I'd love to, but people get really emotional when I sing.
Help from a team that will exceed your expectations.
Welcome back. It's time for the chart master, James Boyd.
All right. One of the stocks we're going to talk about right now is Southwest Airlines. And what we want to take a look at is first we're going to look at the 3-year weekly chart. And when we look at the 3-year weekly chart, first thing you'll really notice is a lot of sideways consolidation. As a technician, not every chart that we look at is going to have a trend that's to the upside, maybe like a growth company. This has been something that might be more of a swing trading stock where you're trying to buy low or sell high, or buy high and maybe sell higher. This is one of the charts where we've had a lot of up and down. Now, some of the main areas we want to be looking at here on the weekly chart is probably right about, let's say, about the $49. We'd also want to be looking at technical areas like we are right now. We'll see these in just a sec. We're right about, let's say, the $58. So shorter term right now, we're getting more equal lows, equal highs, with some of these triple top areas really coming right around the area of probably about $64. But right now, we're really kind of in between that $9 range. Now, this might be maybe, again, a stock you might choose to short-term swing trade, or maybe do options where it's more time-based, not as much directional-based. If we go to the daily chart, what we're going to notice is over time, we've been seeing lows, lows, higher lows, kind of more like double bottoms, and reversing to the upside. You'll also notice that when we take a look at this chart and we kind of drop down, come back over, and then come back up, it's really creating a base or a bowl. Now, if you look at this right here, this could now be setting up maybe a level of resistance. Again, that resistance is right about $58 or so. So we've created a base, we've come back up, and now all the pressure now is right back on that 58 level. Now the width from, let's say, the support to the resistance, again, the base being about 50, that's really about $8 from the resistance down to the support level. So if the stock was able to really break above the 58, that path of least resistance could be about $66 or so. Now, one thing that might be weighing on Southwest right now is we have OPEC cutting production, okay, which is trying to push the oil price up. And we know that oil is actually a major input cost to the airlines. And you are seeing that the stock is struggling as OPEC has been doing that. And it's sitting right at the support level, right at the 50-period moving average. So if this area or this support level does not hold, the stock could really retrace back down to about 53, and that next level being 50. Also, some investors might be using maybe oil as a way to play long oil and short the airlines. So something that the major driver to right now to airlines is the oil price, especially as we're looking at these airline stocks really at the end of 2019. The other stock we want to take a look at is another company called Save. Now, you might be looking at this chart and saying, will someone save the chart itself? Well, if we take a look at this, what you're going to notice is we have about 55, which was really our M pattern. Think of the M pattern as really that double top formation. That double top formation, some technicians might call that a technical murder pattern. That's not good when you see the double tops, because you're seeing where investors are not willing to buy the stock at a higher price. The key words are at that time. The price from that double top pattern came down. We had lows, lows. Price fell down again to those lows. And these lows now match with these prior touches right there. And those prior touches are probably right about $35. Now, as we come down to about $35, there has been some buying. But what you'll notice is as we come down, it's kind of scooping down and coming back up. Price is getting above the 10-period moving average. That upside initial target for us will probably be right around about the 46. Now let's take a quick look at this on a closer view. When we take a look at this chart, I want your eyes to be looking at the gap down that this company had 2 quarters ago. Here's the gap down. As a technician, we know that the gap down where we open it now becomes a line of resistance. And if we take a look at that, you're going to see that the price has never been able to trade above that. You're going to see that it fell down. There it is. Worked its way down. Worked its way down. And even if we go back to even that area of resistance post the earnings right there, this level of resistance now is trying to flip into support. That support being right about $38 or so. And the resistance on this chart really being about 40. So as a technician, you're looking to see, can this stock get out of this smaller channel? If it can get above 40, it could go up and try to attack that 46 area, which the stock has not been able to get above post those earnings. And so that's really the upside. Now, if the stock is not able to really hold that $38 level, that path of least resistance could really be down at a potential spot of about $33. Like we saw in Southwest, if oil prices continue to push at the end of 2019, these stocks, where they seem so strong at support, they might not hold and they could retrace back down. So when you're playing airline stocks, you're also always on a daily basis or weekly basis, always really looking at the trend of your oil prices to see how it's affecting the airline stocks.
Thank you, James. Up next, we look at the impact of the 737 grounding on US Airlines.
This piece is talking to me.
Yeah? So what do you see?
I see an unbelievable opportunity. I see best-in-class platforms in education. I see award-winning service and a trade desk full of experts available to answer your toughest questions. And I see it with 0 commissions on online trades.
I like what you're seeing.
It's beautiful, isn't it?
Yeah.
TD Ameritrade now offers 0 commissions on online trades.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do.
Visit your online broker today to learn more.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The Platform Demo webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate tdameritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today. Technical traders, the chart master is in the building. Trends, support and resistance, key patterns, and technical indicators. The chart master has your live technical analysis throughout the trading day, only on the TD Ameritrade Network.
Welcome back to TD Ameritrade Network's year in review coverage of the airline industry. To discuss the impact of the 737 MAX grounding in the state of US Airlines, I'd like to welcome in Seth Kaplan. Seth is a transportation analyst for NPR's Here and Now. Seth, thanks for joining me. I'd like to start with what effect have we even seen with this 737 MAX grounding on the US airliners throughout 2019?
Well, the operational effect has been important. It was all very chaotic at the beginning when the plane was grounded back in March. And as time went on, the chaos wore off because airlines were able to cancel flights months in advance. But the total impact, if anything, grew because each month the airlines expected more MAXs to be in their fleets. And so they had that deficit. We're talking especially about Southwest Airlines, American Airlines too. United, not as much impact. They didn't have as many MAXs, but affected as well. And some people forget about Alaska Airlines. They forget because when the MAX was grounded back in March, Alaska didn't have any, but it expected to begin receiving MAXs. So it too, although it didn't have to deal with that operational chaos at the beginning, is dealing now with a schedule that doesn't include planes that it expected to have. So operational impact, which of course also translates into financial impact for all of those airlines.
No, and Seth, and one in particular that you mentioned is Southwest. Are you surprised at all by the relative outperformance that we've seen in terms of stock price in 2019 by that particular company, given that it had the largest exposure to the 737 MAX?
Yeah, you got to give them credit for what they have managed to accomplish. The reality is that Southwest's underlying strengths are still there. This is still an airline with the best domestic network of any airline, really an impenetrable domestic network. In an industry where, whenever you start making too much money doing something, very often somebody else comes in, the old Jeff Bezos thing about your margin is my opportunity, right? Southwest is just more insulated from that than any other airline, the way it just has 700 airplanes kind of crisscrossing the country and all these patterns that create these really dozens of what are essentially hubs, even though Southwest doesn't call them hubs, makes it hard for other airlines to get in on what works well at Southwest. And so, it would probably be doing even better if not for the MAX, but it's doing quite well. And look, also all airlines, both those that have the MAX and those that don't, do benefit in a sense from this forced capacity cut, right? These planes are not there. That means there's just less capacity, fewer seats in the sky than there would otherwise be. And that does push up unit revenues. So although none of these airlines would root for this to happen, certainly not the ones that are directly impacted by the MAX grounding, they do at least benefit on the revenue side, even though they suffer in other ways. An airline like Delta benefits most because it gets some of that revenue benefit from the industry-wide capacity cut without having to deal with the MAX grounding on its own.
Yeah, absolutely, Seth. Great point. Well, with oil about 15% lower year over year, that certainly helped a little bit in those fuel costs, and they're able to actually pass those, higher price cuts or price hikes on those tickets onto the consumer a little bit to offset some of those delays caused by 737 MAX. But let's go into the uncertainty around this story, because I think, to your point, this is kind of the big piece of the entire year in terms of airlines. If the delay is extended indefinitely into 2020, what is the long-term plan B for some of these different airlines that are more exposed to this particular aircraft?
Yeah, and you mentioned fuel prices. You can't talk about the industry without talking about fuel prices. They're just such a big part of the profitability picture. And you're right, that decline in fuel prices likely for an airline that's doing well anyway, like Southwest, completely offsets the MAX impact, even though you can't count on these low fuel prices going forward. In 2020, kind of more of the same. We've seen this kind of creeping impact here, where the airlines that expected to have MAXs are at a bigger capacity deficit than they expected to be, and at some point they're going to have to make choices about what to do going forward. When it looked like it might only be weeks or months of a grounding, nobody was going to change their long-term thinking just because of that. But at this point, if you're any of these airlines, certainly if you're Southwest that flies only one kind of airplane, you're thinking about going forward, what do you do? And Southwest has broached that once unthinkable topic of, do you get a different kind of airplane?
United Airlines CEO Oscar Munoz announced in December that he will be stepping down. How do you see this transition to a new leader for that company impacting them going into 2020?
Probably not a lot of impact because this was long anticipated, even if nobody knew exactly when the timing would be. The point was always Oscar Munoz late in his career, kind of a transitional figure, able to step out at a rather good time and hand the reins over to Scott Kirby, who has a very good reputation in the industry, has been associated with a lot of not just the turnaround in recent years at United, but a lot of what has worked in the industry over the past couple decades.
Kind of final thoughts here. Which airline do you feel, or which airlines rather, do you feel are best positioned heading into 2020, and which ones might still have some struggles ahead?
Well, United is one that's just very much going in the right direction. If anything, the challenge becomes, can it continue the same kind of momentum? Because almost by definition, you take your easiest opportunities first. And when Scott Kirby went in there, joined Oscar Munoz, clearly they saw a lot of opportunity and took it. That now becomes more difficult to keep making the same kind of progress, for the pace of progress to keep up. So we'll have to keep an eye on that. But so far, so good there. Delta, what I just said, applies even more. You sort of say, can they improve from where they are? They are operationally, for example, even far better than United right now, but they have indeed managed to keep improving despite it all. American is one kind of in the opposite situation, where on one hand they've struggled. 2019 was not a good year for American Airlines, an airline that a few years ago they were the one. When people said, who might catch Delta, at one point it seemed like American, and now they seem very far away from that. United is the one, starting to nip at Delta's heels. But on the other hand, American has the most opportunities if they can manage to take advantage of them.
Alrighty, Seth, we've got to leave it there. Great insight. A big thank you to Seth Kaplan for joining the show. Coming up, we're going to be looking ahead at some of the hurdles that Boeing faces going into the new year, into 2020, and what to watch for the company.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the Income Investing course and a whole lot more.
Why did I add futures to my trading strategy? 24/7 access to diverse global markets, like wheat. Can you say growth opportunity?
We should probably harvest that.
Welcome back to TD Ameritrade Network's year in review coverage of the airline industry. To discuss all things Boeing, I'm joined by Tim Lesko, partner at Granite Investment Advisors. Tim, let's start with what you thought about how Boeing handled all the fallout from both the crashes and then the eventual grounding of the 737 MAX.
Well, I think from the get-go, it seemed like Boeing had a pretty good handle on it. They were making some changes. And when it was just one crash, it seemed like something they were going to be able to get through. We've had delays in airplanes before. We've had fixes for airplanes. But after the second crash, I'd say Boeing had some struggles in their communication. They've been accused of pilot blame. They've been accused of airline blame. And really what people needed to do was sit back, relax, and wait for this thing to actually come to an investigation to get some results.
Yeah, and Tim, it's amazing how strong the stock was performing prior to the announcement of both that second crash and then ultimately the grounding. The stock's still fairly flat to up small on the year. So when you look at the hurdles facing Boeing going forward, are there still plenty for them to overcome, or is there still a plan that's laid out for Boeing going into 2020?
Well, I think you hit the nail on the head. The stock had done very, very well in the early part of the year going into the second crash, as people thought that they were going to begin to see the higher production rate for the 737. For a company like Boeing, they are always in the midst of either development cycles or production cycles, and the production cycles can be very profitable. And this grounding has really delayed the profitability that people expect from the 737 MAX.
Do you see, Tim, that has a meaningful material impact on both the supply chain, but really the overall economy here in the U.S., or is it still pretty Boeing specific?
Well, it's very Boeing specific, but certainly it's a large part of our durable goods orders, and it's a large part of our manufacturing base and our export base. So it will affect the numbers that we all react to on a daily basis. It used to be that everybody followed Boeing and followed the FAA around the world when it came to certifying aircraft. And in today's political environment, I don't think we have the same, call it, dominant position that we used to.
Yeah, and Tim, when you're talking about Boeing in terms of its performance and its stock price, primarily from an investment standpoint, we talked about its performance prior to the second crash, up over 30% to start the year, basically flat to coming to the close of 2019. When you look ahead to 2020, from an investment standpoint, is this one that you like going into the next year, or is this one that you're a little bit cautious on and maybe you stay away from?
Well, I think it's something that you maintain interest in. It's too big a part of what's going on in global growth. It's too big a company. It's a duopoly of two manufacturers. And if they get back to that run rate of making, call it $22, $23 a share in earnings, the stock is cheap here. It was part of the great momentum run up in the first quarter of the year. And as a lot of those momentum stocks have taken a pause, Boeing has taken both a pause and a decline based on some what we think are going to end up being short-term misgivings. We've had delays in aircraft before. We've had airplanes grounded. Just look at the 787 half a dozen years ago. So this is something we think that they will weather, and it's very hard to see somebody replacing Boeing as the world's largest airplane manufacturer.
Hey, well said, Tim. I can't argue with any of that. Thanks for joining us. Keep watching the TD Ameritrade Network's special year in review coverage, and don't forget to check out our on-demand content on the TDAmeritradeNetwork.com. I'm Alex Coffey. Thanks for watching.
I'm happy to give you the tour. I love doing it. Hey, Jay.
Jay? Charlotte.
Oh, hi.
He helped me set up my watch list.
Oh, he's terrific. Excellent tennis player.
Bye-bye. I recognize that voice. Annie? Yeah. She helped me find the right bonds for my income strategy.
Very popular around here. There's a birthday going on.
Carl, he took care of my 401k rollover.
Wow, you call a lot.
Yeah, well, it's my money we're talking about here. Joining us for karaoke later?
I'd love to, but people get really emotional when I sing.
Help from a team that will exceed your expectations.
added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it.
Feel that? That's the beat of global markets, the rhythm of the world. But to us, it's the pace of tomorrow. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. Nasdaq. Rewrite tomorrow.